Hello everyone, this is Business Incorporated on Channels Television and we're glad to have you. I am BC Adebayo. Coming up is decision day for the European Central Bank. A listed tier 2 lender, Diamond Bank PLC, exits the UK. Plus, Royal Dutch Shell declares sweet first quarter 2018 earnings. Well, let's begin with the markets now, starting from home in Nigeria, where the all-share index appears to be struggling for direction at intraday. In South Africa, the GSA index was over 0.5% higher at midday, while Egypt's EGX 30 was rallying around 1.48%. The Nairobi Stock Exchange finished Wednesday's session 0.32% higher. And in the Middle East, the numbers are mixed at intraday, with the Abu Dhabi Stock Index 0.39% up, while the Dubai Index gained 0.55% at noon. The Qatar Exchange was down 0.2%. In Saudi Arabia, the stock index was 0.3% lower and also at intraday. Well, the European markets were higher this morning as investors monitored a fresh batch of corporate earnings. Conrad Boulston is on ground at the Frankfurt Stock Exchange to bring us more details about today's trading activities. Hello, Conrad. How are you doing? All right, Conrad, it's decision day for the European Central Bank with Mario Draghi's briefing at 1:45 p.m. Central European Time. Any idea what's top on Draghi's playbook?
Well, the European Central Bank just came out with its rate decision. No rate hike, no change in terms of interest rates. The main refinancing rate remains at exactly 0% here in the Eurozone. The deposit rate remains at minus 0.4%. And the European Central Bank will continue to buy assets, bonds on the bond markets for up to 30 billion euros every month. Also, the European Central Bank came out with wording exactly like at last meeting. It says that the key European Central Bank interest rates will remain at their present level for an extended period of time and well past the horizon of the net asset purchases. Of course, that will be a bit of a disappointment to many of the monetary policy hawks who had expected and hoped for a bit for more precise wording by the European Central Bank. Especially as we've seen a little bit of weakening economic data recently. Now could have been the time to tell the world, well, the European Central Bank still is confident about the economy, but the ECB chose wording, very careful wording, that leaves all the door opens. Of course, as we speak, the press conference of the ECB with President Mario Draghi has started here in Frankfurt, and a lot of question will be turning about this, about what does he and his colleagues make of the slight weakening in the Eurozone's economy that we've seen recently. Remember how we talked about the IFO index, business climate here in Germany, coming down during the month of April. That is the sort of wording that he will have to answer. And of course, now the market sort of is waiting for this.
Now, Deutsche Bank's news of workforce haircut in 2018 and 79% decline in quarterly profit sent its shares south in early trade today. Give us more details on what's going on with this banking giant.
Well, Deutsche Bank announced further job cuts, and especially in its investment banking units, namely in the United States and in Asia. But many people here expect that also London will see job cuts. The subsidiary of Deutsche Bank there is the most important investment banking operation of the bank. 8,000 people work for Deutsche Bank in the United Kingdom. And according to the statement of the Deutsche Bank, the business is likely to be cut back, as Deutsche Bank says that it aims to shift more decisively to more stable revenue sources. And well, everybody knows that investment banking, with its bond trading, its equities trading, its derivatives trading, that's not exactly a stable source of income, but a very volatile one. In terms of strategy, this is, of course, statement that makes it pretty clear that the strategy of being a global bank catering to all different customers is something that the bank cannot afford anymore. Now it has to focus on the domestic market, on where it's strong, on the German market, European market with its corporate customers, private wealth customers. This is relations that Deutsche Bank can rely on, and that is likely to promise a more stable income. The stock price, you said it came down at the beginning of trading today. It has recovered somewhat together with the broad market. See what the German DAX has done today here. A little bit of a recovery. The same with Deutsche Bank. Obviously, market participants and investors are pretty happy to hear that someone at Deutsche Bank will now change the strategy towards a more stable income.
Now, just before you go, Conrad, let's talk about some hot quarterly earnings on the wire. Royal Dutch Shell first quarter saw weak sales, while BP names a new chairman. In the meantime, there's also Volkswagen, there's Nestle, there's Roche, there's Barclays and Nokia earnings as well. Are investors and traders getting swarmed by all these numbers?
Yes, they are somewhat, with all those earnings reports, which indicate very much in different directions. So what investors and many traders are doing, of course, is they take those earnings report and they cut them down to the bottom line. Have they managed to meet analyst expectations? Have they come in better, or have they, disappointed? Have they not managed, the companies, with their earnings and their outlooks to meet analyst expectations? The bottom line here is, at the moment, that the earnings season in the United States is pretty strong. The expectations had been very ambitious, up to 20% of earnings increases on the quarter year over year had been forecast, and as it looks for the moment, American companies on average have managed to come in with earnings increases of 19.9%. That's very strong, very positive. Of course, most of that was driven by oil companies, energy companies in the United States, also by financials. Here in Europe, the earnings season is not so immaculate. We have seen a couple of companies disappointing with their earnings, or at least coming out with more with less positive and less confident forecasts. The expectations here, on the other hand, in Europe had been much lower than the one for the United States. So the overall mood is still that companies manage to meet expectations. The question, of course, is how long can this go? The same as is reflected in business sentiment indexes like the IFO index is a bit reflected in the outlooks of many companies.
Well, thank you very much, Conrad, for those updates, and see you again tomorrow.